Okay, so what we're going to do now is we're going to do the cash budget section. So the first thing you're going to do is you're going to type out your receipts. All right. Second is your cash sales. All right. So we're going to have a look now. Did we have any sales for August? So you go up to your debtors collection and it shows here $104,000. All right, 104,000 for August. We'll do the same for September. Cash sales 110,000. Next step would be to get your cash from debtors. All right, so if we go up here, cash from debtors for August is 389,600, and for September it's 395,200. Okay, let's type that in. And you type in your total receipts. Just a quick note, if which got a loan in our additional information, if it had stated that, then loan would come under, after we would type out cash from debtors, then we would put loan. Okay, so if we add these totals up, gives us this amount. All right, so then the next step, do your payments. And then your cash purchases. All right, so for cash purchases, if we go up here, there was no cash purchases made. All right, that was given. However, if we look at our additional information, it says in August the company is planning to buy additional photography equipment to the value of 45,000, and we see here that the equipment will be paid for in cash. So you have two options. You could either leave this as 0 and you could put equipment here, or we could put it here. I'm just going to include it here. If you'd like, you could put this in brackets and you can put your equipment. Okay, all right, let's put that in. Okay, so then we have our payment to creditors. And if we look at above here, payment to creditors, August is at 284,750. And September is at 218,500. Okay, the next step would be to include these. Now, from the given information, it does not state when these expenses are paid for. It just tells us that these expenses appeared in the income statement. Now, an income statement is your financial statement for a financial year, so that would be 12 months or for a quarter. All right, so there's two ways we can do this. When the question is silent, you must state your assumption, all right, because they don't specify. So so it's up to us to make an assumption, but whatever assumption you do, you need to state it. So we can either just enter these amounts exactly the way they are and assume that that 45,000 administration charges was for August and September, or we can take these amounts and we can divide it by 12, all right, and then we can put that total in there. You can practice both, and you can see what it gives you. For time, I'm just going to put it as they are. Also, a quick note, remember depreciation is not a movement of cash. So although it says 35,000 Rand, don't enter that amount. Rather put it at 0 because it's not a transaction. Okay? Okay, so now that that's added, we're going to include one more thing. It says here that the old equipment will be sold for 12,000 Rand cash. Okay, so if we go up here, cash sales, again we're going to assume that it took place in August because it said in August here, so we're assuming. So we're going to have to add that value, 204,000. all right, so 104 plus 12,000, that will give us 116,000. Yeah. All right. The next step would be to calculate our budget deficit or surplus and our opening balance and closing balance.